Okay, I think we're good to go. Right in the nick of time, as always. Hope everyone's doing well. And yeah, let me know if audio and video are salvageable, at least. That'd be helpful. Okay, cool. Yeah, normal Monday markets session. Hope everyone's had a nice weekend. First things first, Blockfolio sponsors Technical Roundup, YouTube newsletter, all the fun stuff. Mobile trading app, good way to get your friends and family to ape into crypto. Hopefully not at the top for a change. Don't want any awkward family dinners or reunions. But yeah, mobile trading, asset swaps, very easy to move around. They added very recently some more fiat gateways and payment options. So that's awesome. Be sure to check out Blockfolio. Don is well. Just waiting on information as far as I know. So yeah, plenty to talk about. Not least because Ethereum is up 12% on the day, which is insane. Ethereum now is the price that Bitcoin was at its March bottom-ish. Isn't that insane? Like, Bitcoin bottomed at 3k, now Ether's up at 3k. It's just ridiculous, unbelievable. In a very positive way, of course. Something we will discuss for sure. But yeah, I hope everyone had a nice weekend. And yeah, let's begin with our little discuss tab. Some interesting things, some less interesting things. This is more housekeeping. There's a phishing bot targeting MetaMask, as it always will. Seed phrases into Google Docs, etc., etc. It comes from an account that looks normal, suggests filling out a support form on a major site like Google Sheets, and asks for your recovery phrase even. I know we've all been here for a while, and we've all learned our lessons, but just as a timely reminder, do not ever, under any circumstances, enter your seed phrase online. Or even offline. Don't keep a sort of document with your seed phrase on your computer, etc., etc. It's just the worst thing you can do. Offline, backups on paper, whatever, that type of stuff is my preferred approach. A hardware wallet, if you prefer, although that comes with its own risks as well. But certainly don't do the Ian Bellina infamous Evernote, and certainly don't type it into random Google Docs. Just a bit of housekeeping on the reminder front. Especially with ETH price going up to where it is now, I'm sure the sophistication of these scams will also go up. And no, I said don't enter your seed phrase online. So that's that. This one was funny. It said Mogo expands portfolio with corporate investment in Ethereum alongside its existing investment in Bitcoin. So I was like, oh, cool, corporate purchases of ETH. Maybe that's, some of the catalysts for this 12% day. And then I checked, and I think they bought like 100 or 200 ETH. It wasn't it wasn't that much. Is the answer there? If memory serves correctly, maybe we can see the number. Very. Yeah, they purchased 146 ETH at 2.8k. Good for them. It's not a lot. It's not Michael Saylor aping in hundreds of millions, billion, whatever. A more conservative purchase, but, a corporate ETH purchase nonetheless. Now, wouldn't it be hilarious if we had, like, leg one of the bull market? If we take some creative liberties. It's like, okay, leg one of the bull market are corporates purchasing Bitcoin. We have a period of sideways. And then leg two of the bull market, corporates purchasing ETH or rotating to ETH, whatever. That would be hilarious. I'm not sure it's quite written in the stars right now. But this kind of stuff of ETH outperformance, ETH doing well against Bitcoin, especially over such a long period, like a month, it's going to be pretty hard to ignore those types of narratives. Again, even just looking at the monthly candles, this is what the ETH BTC monthly looks like here, and then this is just since the monthly open. That is really, really impressive. And again, from a high time frame chart construction point of view, bear in mind this is 2018 here, so you basically have, with some difficulties, if maybe you want to use this level, doesn't really matter. Ultimately, looks like you have a break through a multi-year range, which is pretty impressive. And I think the weekly time frame, one we've discussed a ton, makes this case as clear as it gets. This is your multi-year range high. Fool me once, second close above, almost always not a fake out. And here we are, the follow through, with market landing into its first area of structure into these previous lows. So that's kind of an ETH. We'll discuss this in more detail, obviously, but just something to bear in mind with these treasury purchases, and maybe we'll see more of them. So let me nuke that very quickly. So PayPal wants in, or wants more crypto exposure. No surprise there. Supposedly exploring the launch of a stablecoin, which is nice. Now, I'm not really sure what, currently in the stablecoin ecosystem, they've got like pretty clear use cases, right? And the big ones, of course, I mean, the ones that at least come to mind to me are Tether, right? USDT, which is all reliable. I think still the number one by market cap, and also for all of your, or much of your, linear futures trading when it comes to Bitcoin, altcoins, etc. USDT seems to be the stablecoin of choice. And then when it comes to DeFi and slightly more kind of blue chippy, quote unquote, regulated stablecoins, we know that USDC and Ethereum, and then DeFi by proxy, occupies that bit of landscape. And those players seem to be pretty well established. And there are other stablecoins, of course, like I think Coinbase had its own. There's the Binance stablecoin, some of which got caught up in that rug pull on BSC, etc., etc. But those are the big ones. So I'm just really wondering is it just going to be your blue chip, quote unquote, crypto payments coin if PayPal comes with a stable coin? Like, what are they trying to capture? My answer is I don't know. Maybe if I'm being cynical, someone really clever came to them and PayPal was like, okay, we want to get into crypto and want to catch, be recipients of some of the payment flows that are happening around crypto. How do we do it? And then someone with very slick hair, too much hair gel, came to them and said, well, you could always do your own stable, we could give you a white label type of solution for a stable coin, and then you'll have your own kind of payment mechanism. Maybe that's the angle there, but I'm personally not sure. It looks like there is some speculation that it'll be on the Avalanche blockchain, so maybe there's like a sectoral play there, but I don't know, to be honest. My slightly cynical take is that the stablecoin players are really well established at the moment, and there doesn't seem to be like a gaping hole in the market. Nevertheless, we can just file this in our filing cabinet under the adoption category and move on with our lives without thinking too much about it. So yeah, just some exploratory talks. Maybe someone shows them this clip and tells them it's not like the best idea in the world. I highly doubt that, but that's my take nonetheless. And more when it comes to the adoption train, of course, is eBay. All these big companies which used to ban people for crypto payments are aping in one way or another now, trying to catch some of the gravy. NFT selling on eBay, that's an interesting one. I don't have a lot to say there. I think we've discussed previously how NFTs are the kind of normie gateway to crypto, or at least tend to be quite recognizable. to normies when it comes to crypto. Like, Bitcoin is too confusing and expensive. The unit size bias works against us there. DeFi is too confusing. ETH, not as clear. Altcoins never really made it that far. I mean, there were some signs of it with SafeMoon and TikTok and all that type of stuff, but compared to GameStop and Wall Street bets, etc., altcoins, certainly lost out that cultural battle. It seems like the crypto proxy for normies, in recent times at least, have been NFTs. So maybe it's just a money grab and the hype will fade away, but there seems to be some sort of staying power. What the trade there is in terms of, is it the CryptoPunks floor? Is it UTK? Maybe there's some sort of index to get long. I don't know is the answer. Maybe we can get someone on to talk to us about how to get long NFTs, or if it's such a good time to do so. I know there's no clear index, and people use different metrics to kind of find a floor or ceiling for these things. Like, how much, certain Top Shot packs, the CryptoPunks floor, as I've mentioned, certain coins, etc. But it's not as clear as some of the other sectors like DeFi, where you've got like clear blue chips and even liquid indices that you can just get long and go have fun. So we'll kind of see where this goes. And again, same old payment options, including cryptocurrency for eBay. This should come as no secret, given we've discussed this before, but using crypto to pay is generally pretty weird. If you want to use stablecoin for payments, awesome. I think that's kind of what they're there for. But if you have like Bitcoin and ETH and BNB or whatever, and you're using those, or I imagine if eBay does it, they'll go for the old school blue chips like Bitcoin, ETH, Litecoin, Bitcoin Cash, whatever. Like, why are you using crypto to pay for stuff in that context, right? Especially when stablecoins are everywhere and so easy to use. Well, yeah, that's kind of the argument, right? Like, if you think that your other cryptos are going to go up in price in a bull market, and your stablecoin is unlikely to go up in price in a bull market, and they're made for payments or for settlements, why would you use crypto as payment? Like, it looks cool, right? And it makes you feel like it's real world money or whatever, but that's sort of not its function. At least in my view, in many cases. It's the old joke of, the dude who bought the pizza in when was it? Was it 2011? I don't remember. I'm sure you remember the Bitcoin pizza guy. Maybe we're living in a modern day analog of that. If you're buying your coffee with Bitcoin and ETH in 2021, that could have been the coffee shop by 2030, blah, blah, blah. Long story short, if you're long something or investing in something, or it's going up in value, using it for kind of one-off payments is just pretty weird, and an experience which brings friction that's easily avoidable now that stablecoins are pretty much everywhere. So that's a quick take there, but of course, just saying crypto payments kind of gets the drooling boys going. Last one, this FT article was a bit of a roller coaster read, and it just shows how, like, I'm not the kind of person to read mainstream articles about Bitcoin or crypto and to just jump on their necks, like an attack dog wanting to defend everything. But some of these are just pretty oddly written, is how I'll make my argument, right? Oh, we're at the anniversary, May 22nd, says Dimitri. Yeah, so 2010. That's Bitcoin pizza. So this is the thing, right? The premise of the article was, Bitcoin was worth 7K, now it's worth 54K. I mean, it was literally half this in March, right? It dropped to 3K, so I know why you're using 7K. I mean, then a year-to-year comparison, sure, but like just a bit before that, it was literally 50% lower. That's probably worth mentioning. And it's up to 54K, etc., etc. And they kind of, I think the intention of the piece was to juxtapose some bullish arguments and some less bullish arguments. I mean, this is a weird one to start with. Is it just a big Ponzi scheme or a genuine investment opportunity, right? Yeah, I don't know. This seems a bit lazy. Now, this is the bit which gets me pretty... this is where I think the argument falls apart to a large extent. So, is it really different this time? Obviously, comparing and contrasting previous rallies with this one. After a year of spiraling prices, bears warned of the growing risk of a 2018-style collapse. Yeah, bears are... I mean, doomers are generally wrong in markets. So whatever, I'm sure bears have been calling this thing bearish since 3K. Now, this is where the argument got really weird, right? So we're discussing, supposedly, the merits of Bitcoin itself. Bitcoin too good to miss or a bubble ready to burst, right? So we're discussing Bitcoin, and in the introduction section, it talks about the largest cryptocurrency by volume, Bitcoin prices, etc., right? And then it compares and contrasts, is Bitcoin a Ponzi scheme or a genuine investment opportunity? So, like, the stage is set to discuss whether Bitcoin is a good investment, right? Now, this is the weird thing. If you look at the arguments against, or like the so-called arguments against, this is just so off topic. I really think this is irrelevant. Look, they may be right to do so. Investors globally have lost more than 16 billion since 2012 in cryptocurrency related scams and fraud, right? According to the FCA. Now, this is just weird to me. If you're going to discuss the merits or the lack thereof of Bitcoin, using cryptocurrency fraud as an argument against Bitcoin itself is really weird. Maybe I'm just an idiot, but I don't understand the link. Like, if someone on Twitter clicks on a fake Elon Musk giveaway and sends their money to whatever scamming contract is taking care of that, does that reflect on Bitcoin as an investment itself? Maybe you can answer the question, chat, because I've got no fucking idea. To me, upon first reading, this seems like totally irrelevant and kind of confusing. They're like, okay, there's a sector called, there's crypto, there's BTC, right? And the way we're going to criticize BTC is by going after a specific crypto fraud, which is odd. Maybe I don't understand, but it just seemed like completely irrelevant, right? And then, of course, the good old environmental argument as well. And then you could, prepared to lose all your money, prepared to lose 100%, kind of like most other investments, right? Or at least a lot of other investments. You can make a distinction without a difference in terms of huge losses, but that's kind of how risk and speculation works. You can lose most of what you invest into that opportunity. And they talk about leverage being risky. I mean, sure. Choosing the right coin is also important. There are hundreds of cryptocurrencies. Most are worthless and some are plain scams. Okay, but is the fact that there are a lot of scam coins an argument against Bitcoin? I'm not so sure. Maybe it is, but I'm not convinced on that ground. So yeah, a bit of a weird article. I tend to just get a bit turned off. At least my brain tends to turn off whenever I read critiques in the mainstream, and the first thing they go for is like, there are a lot of crypto scams. I'm just not sure that argument has the persuasive force or is as relevant as they may think it is. Like, I would literally rather respond to Tether arguments than something that's completely irrelevant, right? So yeah, just more mainstream stuff. I'm not sure. When I talk to, if someone happens to ask me about crypto in the real world, and they're not like investment professionals, they don't care, or it's like a quick conversation, whatever, I tend to go with, it goes up a lot, it goes down a lot, it's pretty volatile, but maybe having some portfolio exposure for the years to come is a reasonable decision. I just give them that conservative version. But maybe we're all stupid falling for the Ponzi schemes, Let me know what you think, but that was just my quick take on this article. And talk about low-hanging fruit, right? It's like, oh, well, what do you think about Bitcoin? Well, there's a lot of crypto scams. Okay, but what do you think about Bitcoin? Well, there are a lot of shitcoins. It's like, okay, are we going to have a conversation here or not? So that's that. Hope that short news segment was enlightening. If not, I guess I apologize. Let's talk about the Bitcoin, ETH, altcoin plays I'm interested in, and then see where we land. So on the Bitcoin front, not much has changed, really. It's still stuck in this consolidation and hasn't broken either way. It bottomed really nicely, bounced, But I mean, if you compare it to ETH, hasn't had that type of break from the range, break from balance. It's kind of just stuck on the other side of the range right now. And that's sort of what I'm waiting for this consolidation to resolve. Because again, if the idea is that the market is simply moving in this fashion, whereby you have an impulse, you have consolidation, impulse, consolidation, impulse, consolidation, etc. Like, generally speaking, if this is the trend that we're dealing with, I, for one, have no issue doing business on the breaks of those consolidations, even if they're starting to depart from the original range itself. I have no moral qualms about more or less positioning post-breakout in these cases, if I can reasonably assume that I get to capture all of this to follow, right? So again, how precise should you be with your entry? Well, the question is, how much are you trying to capture, right? Like, if the range you're trading looks like this is the size of the rotation that you're trading on a low time frame, then your entry, if this is kind of support and this is resistance, you don't have a lot of space to work with in terms of how precise your entry has to be, right? So you better be kind of on your toes. However, if you're trading one structure here and then the next structure is maybe all the way up there, then obviously as a result, you've got more room to work with when it comes to selecting your entry. I think that logic, as uncomfortable as it may be, is somewhat applicable to Bitcoin in present circumstances, whereby this current range is a bit of a pain in the ass, right? Market underperforming ETH for pretty much a whole month now, which is a lot. ETH BTC, crazy. Weekly close didn't smash this level. You can just see from my thick boy line, it's back at the range high. Then the question is, why not wait for something like, I mean, without mincing drawings, I mean, literally something that looks like that on the closing basis, like that. Why not wait for this and then get long if you're then targeting, you know, your 70Ks, 80Ks, etc., etc. And I don't think there's a hugely convincing answer to that, especially outside of kind of short-term leverage trading, whatever. I mean, from a portfolio allocation, rotation, etc. point of view, why not wait for this type of impulse? Because then at least I would be expecting 3 or 4 monster-looking weekly candles as we break out from a multi-month range, right? So I don't know if that makes any sense to anyone else, but for me, Bitcoin's been underperforming. It's stuck in a range, and even within that range, it's not exactly at support or forming some sort of bullish pattern towards the lows. It's just stuck at the upper part of the range for now. So I'd rather wait for it to be obviously bullish and then ride the weeks of uptrend that I presume are going to follow, rather than get stuck in whatever this is. Does that make any sense so far before I bring ETH into the picture? Will Rule says, so buy high, sell higher? Yeah, honestly, buy high, sell higher. I have no objections to that. Halo Crypto says, can we call this a multi-month accumulation? We can if it goes up afterwards. Yeah, so that's kind of Bitcoin. Now, if we look at ETH, obviously get a slightly different picture, actually a significantly different picture. It doesn't even look like there was a market-wide dip on ETH. You had these, during Bitcoin weakness, you had these 3 small-bodied but still green candles poking up, and now it looks like after the last weekly close, it's kind of the expansion from the breakout. Like, ETH looks good, and even psychological quote-unquote resistance at 3K got smashed on the way up so far. Now, in terms of where does that leave us with TA structure, there really isn't much up here, so to speak, unless you really want to go on low time frames. Then you can start boxing out these pre-breakout consolidations, which you're kind of forced to do. But if we're talking higher time frame structure, the nearest one is the pre-breakout consolidation. And that's all the way back at, where is that? Here. Pretty much in the low to mid 2000s. So even a retest of the nearest high time frame structure is like a, 40% haircut or something? It's a pretty sizable... We've traveled quite... sorry, not 40. It's like a 30... Yeah, it's like a 25-30% pullback to the nearest technical type of structure. So the market's moved far away, right? So what options do we have left? Well, two questions to answer. If we want to get long in these cases where high time frame structure is far away, how do we do it? And second of all, if we're in price discovery, where is resistance, right? So let's try to answer those in order. Now, the first one, as to, okay, the market's like up a lot. How do I get long this market? There are a couple of answers. The first one is that you simply wait for... You play the higher time frames and you wait for one of two things. So, question one, something is up a lot, and we're trying to answer how to long, right? And these are essentially our options. We're going to wait for a big pullback, or it's going to be wait for new structure, right? So again, the market's up a lot. We know that the most recent range is our highest time frame, our nearest high time frame support. So okay, we're up here, that's down there, but what if I want to get long this market, right? How do I do it in a reasonable way? Well, if we want to stick to the high time frames, right? We have two options. One is to wait for the pullback, which in this case, at least from what we have available, is the pre-breakout consolidation in the mid 2Ks. You had an impulse, range, big break from the range. That's expected to be support if the market goes back there. So that's kind of option one. What's option two? You wait for new structure to form. So say the market never, or at least not for a very long time, comes back, it has no willingness to return here. Well, how do I get long here if the first option isn't available? And the answer is you wait for new structure to form. So for example, you get another range formed here, or again, it could just go higher and then start to range. But basically, you need more candlesticks is the best or simplest version of way of expressing that. You wait for more candlesticks, and then you use the newly formed structure up here, and you forget about this and work with what you've got, right? So again, let's say you get another leg up, and you get some sort of consolidation formed, etc., and then you get a break from that structure. Then you're longing up here, still based on high time frames, without having to wait for the pullback all the way to the mid 2Ks. Does that make sense so far when it comes to the high time frame stuff? Like, what to do up here? Okay, now, outside of high time frames, it's the same old discussion, right? The high time frame levels give you more quote-unquote reliability, so to speak, but sometimes they can be harder to reach. So for example, you need to wait either for a bigger pullback or wait for more time to pass before getting some type of structure, as we just discussed. What if the strategy is shorter term? Well, then if you go to lower time frames, that's kind of your answer. If you're not comfortable, or your strategy doesn't allow you to, or the urgency with which you want to get filled, whatever it is, doesn't allow you to wait for the high time frames to either catch up or offer you something else, the answer, of course, becomes trading lower time frame structures or consolidations. And in those cases, you kind of just have to go back to your basic TA stuff. So either your levels or your impulse consolidation, impulse types of structures, and look for those on lower time frames. Now again, as we've discussed on previous live streams, the benefit of the low time frame system, or looking at lower time frame structure, is that you're more likely to actually get a trade, get filled. You have more actionable stuff to refer to. Now, of course, the risk of relying on this lower time frame stuff, let's say our higher time frame correction level is here, and you decide to get long on an intraday structure, If you're wrong, and instead this isn't just like a lower time frame bounce, but it's actually a high time frame correction, you really get smoked buying here as the market kicks in for a higher time frame move. So that's kind of, it's just, you know, it's not like a this one's better, this one's worse. You just have to be aware of the trade-offs, right? If you're leaning on the high time frame side of things, the positive side is it's kind of more reliable, right? And of course the negative side is the kind of likelihood of how actionable it is, right? It's likely to be less actionable. And also, it's going to be slower, as you have to either wait for the higher time frame pullback or wait for a new structure to form. If you rule this out and you rely on low time frame structure, it's kind of the opposite of that, right? The plus side is it's more actionable, right? It's closer to market, closer, and so you have to wait for less, right? You can get involved in the market at closer levels. You're not waiting ages for a high time frame pullback. But of course, the negative side is if caught by high time frame, you get wrecked. Or at least it's a very uncomfortable place to be if you're buying a low time frame pullback in what actually ends up being a higher time frame correction. Does this make sense, at least conceptually? Okay, that's good. And like the video, blah blah blah. Let's keep our keep our good habits. So yeah, that's sort of, now that we're armed with all of that, we can answer the second question we had way back, which is if you have a USD pair in price discovery, where can you look for levels of resistance? I mean, the obvious TA answer is if you have a level of support which fails, that becomes resistance. We know that, we know that, but at the moment there isn't a ton of structure to work with to arrive at that conclusion. But then we can also, I think the more useful answer, look at the ETH BTC pair to get a sense of where ETH USD resistance may lie. Because if we're expecting resistance in ETH BTC, we're expecting some selling pressure in the USD pair as it becomes more attractive on a relative basis to rotate from ETH to BTC, arguably, right? So in that case, where is ETH BTC resistance? I believe it's around 0.05, 0.06, at least the first level, which is more or less where the market is reaching for the time being. Again, this previous area of highs and lows, specifically support before this bear market and multi-year range. So this is kind of the first trouble area at 0.05, 0.06, pretty much this floor which broke and now we're retesting it. It's like a really long-term rounded retest of broken support being retested as resistance. Now again, in this case, the context also matters. So this is the first trouble area, right? Now does that mean ETH BTC is just topped forever and the market doesn't even need to respond to this? However, the context into this level is pretty bullish because you have a multi-year breakout. And now that multi-year breakout has reached the first trouble area. Now, if you have a multi-year breakout, you'd normally expect the first trouble area to get rolled over, just because the magnitude of the move from such a big consolidation tends to steamroll the first resistance it runs into. But that would be kind of counting our, counting your eggs before they hatch, your chickens before they hatch, your hens before they lay eggs. I don't know what the idiom is. I didn't speak English. But I'm sure, it's premature is what I'm trying to get at. So, of course, on the other side of that range, we've got kind of lowest close support being retested as resistance. And on the other side, you've got highest close resistance as the range high. So from an ETH BTC point of view, I know we're at the start of the week, but we will get some pretty good information during the course of this week. Specifically, if we get a close above the lower boundary, then there's a really good chance of ETH BTC continuation towards the upper boundary, and there's a lot of space to capture between A and B in that case. We also know if this level gets completely stuffed, it doesn't mean it's bearish, right? There's still, again, the context is a massive breakout, and there's still structure in terms of support reasonably close to the level, but at least we'll have some signals of, okay, maybe there's some rotation going on from ETH, either back into Bitcoin or just away from ETH generally, maybe into altcoins, etc., etc. But this here is the first real technical resistance for ETH BTC, which in turn could also suggest the first area to, I hate this term, pay attention in ETH USD. And in that regard, I think the weekly close will be really instructive. Anything above here, which probably get more candles that look like this towards the range high. Any weakness would be weird. It'd be kind of, I'd be slightly surprised given the context, but it is resistance after all. And then maybe we see Bitcoin play catch up. I certainly think, given where Bitcoin is structurally, if it breaks out from this hideous range high that we've discussed a million times, like if we get like a weekly close above this, or that kind of dildo candle we discussed where it just smashes structure, there's a really good chance that Bitcoin players catch up in a big way, and we get that pullback from resistance in ETH BTC as well. But at the moment, there isn't like a ton of evidence to work with either way. If you wanted to build a kind of market bear case, which is really tentative at this point, certainly not the view that I hold, but you would essentially argue that BTC USD is at weekly resistance here, and now ETH BTC is also at weekly resistance. And then your argument would kind of be that Bitcoin is going to trade lower from this level of resistance, and ETH is going to be unable to drag the market any higher, given it's at a relative area that's less attractive compared to Bitcoin. That's kind of your bear case up here. I don't find it hugely compelling, but it's always worth keeping these theses in the back of your mind as well. But long story short, just to summarize the majors, Bitcoin still kind of sucks. Weekly range high hasn't been persuasively broken. I want to see just this whole area get smashed, and then I think we see huge candles on Bitcoin, and then ETH BTC lower as well, and we play catch up for a few weeks on Bitcoin. So ugly range, and not even in an area that I think is a good buy in relative terms. The good buys in relative terms in a range tend to be at support or at support after a deviation. Neither of those have taken place, nor has the market offered the type of strength, just clearing all this structure, that I'd be happy to buy into in terms of Bitcoin. So it just kind of sucks. It's at resistance. I don't want to overanalyze it. It hasn't really done much. I'd love for it to play catch up. I just want to see a big barrage of candles through all this messiness to get continuation. I'm still waiting on that evidence to emerge. As for ETH USD, Mega Moon, not much to say there. We've discussed our options in terms of higher time frame, new range, or pullback to structure. And then if that's not good enough, the first real intraday area of support is essentially around 3,000 as both a technical level in the most recent pre-breakout range and the quote-unquote psychological level around 3K, which you wouldn't want to see lost either. When it comes to ETH BTC, not losing sight of the context is important, that this is a multi-year breakout from a range. That said, first trouble area reached at 0.05, 0.06. In that regard, the weekly close will be instructive. The continuation play will become most apparent on strength through 0.05, with the next objective being 0.08, which is an extra, percentage-wise, another 50%. Does that help somewhat? Does that make sense? Are there any questions? Since you would not go long now on ETH, does it mean that you will sell existing ETH positions? I don't have an existing ETH position. How much weight do you put into psychological levels as support? Not a ton. I wouldn't trade off of them, but I kind of keep an eye on where they are. And it also depends on market context. Like if everything is setting new all-time highs and there really isn't anything to work with, like in DeFi season, using psychological levels can sometimes be your only levels. Like, okay, sushi to $2, $4, $6, etc. So it depends on the context. I put weight on them depending on market conditions. If I've got nothing else to work with, I'll take them. I'll take them all day. Why is 0.07 not a weekly level? I don't have 0.07. I'm not sure what there is at 0.07. I assume you mean something based on this consolidation, but it's just a bit wavy for me. I'd rather do. I think the low is super clear, and the high is very clear, and mid-range doesn't tend to be a high conviction type of area anyway. That's probably my answer there. I don't know about Stablecoin. What do I think the short-term... Sorry. What do you think the short-term time frame for buying BTC or ETH? BTC, I personally wouldn't. Simply because it's a weekly structure. So it's just not an area that my system gets me involved. On the ETH USD side of things, I think the nearest structure that I could, in theory, buy is this intraday consolidation at 3.1k. That's kind of my short-term view for the time being. Do I think a blow off top is mandatory before the end of this trend? I think it's mandatory. It's probably likely, or I certainly wouldn't ignore it if it were to happen. But I don't know about mandatory. How do you play the rotation from ETH, mid-cap, low-cap? It really depends. So, for the most part, I'll keep... Cash in my portfolio is the exception. I always want to have some sort of exposure to the market. And that exposure will take the form of high caps. I think I talked about the list on Ledgercast and Casual Friday. But it's basically some form of the following: Bitcoin, ETH, and then I'll also, kind of as proxies, look at FTT. I'll look at Sol, and then as kind of middle one with no clear logic, just kind of exchange coin, generally pretty bullish, BNB. And I kind of rotate around and move my weighting within these. And then when it comes to mid caps, instead of kind of investing in them or allocating my collateral to them, I'll just trade them on... I'll trade their futures contract with leverage instead of buying spot for the most part. That's kind of how I look at that sort of stuff. Yeah, we can look at BNB for sure. It's in my active list. Again, this is one I spoke about on Casual Friday. BNB is in an uptrend, right? The coin is going up. And we had a breakout above that level, retested as support. So yeah, resistance, whatever. You got your retest, and then really good reaction from that, which is what we're getting at the moment. So that's good. I think as long as it doesn't do its whole kind of failed breakout pattern, whatever, which would be surprising. But anything that stays above the breakout level, 600, expecting continuation. Especially if ETH keeps going up, I expect BNB to follow suit as well. And the BNB ETH pair looks not great, but decent. But yeah, this is like 50 IQ TA that works. You have a coin that's in an uptrend, you had a consolidation, and then you had a break from that trend. Your presumption should be continuation, and your invalidation is a loss of the breakout level. So pretty 50 IQ, but reliable play in that regard as well. So BNB looks fine. FTT tends to mirror Bitcoin quite closely. So that's one that I'd look to get exposure to during a period of a Bitcoin breakout or Bitcoin outperformance. Because I think if Bitcoin breaks out, FTT will just do better. It's shaping up pretty nicely. It looks like we're approaching its, depending on how this daily closes, a highest close on the USD pair. But again, for me, the FTT play would be Bitcoin breaking out, expecting FTT to outperform, and so that would be the catalyst to move collateral and or to get long FTT. It tends to kind of follow Bitcoin, so I don't want to be getting long FTT if I'm not sure what Bitcoin's going to do. So in that kind of obvious dildo scenario, that's where I'd look to allocate in that direction. As for Sol, this is one of those that had an interesting correlation come out where it would be positive, like inversely correlated with ETH, but only on down days. But now ETH is kind of allergic to down days; it's up only. And if you look at the Sol ETH pair, that doesn't scream confidence for the time being. Kind of looks maybe retesty or whatever, but weak from an eyeball type of perspective. So that's also just one to bear in mind. And also just from a TA perspective, the fact that this breakout is finding resistance is just making me a bit uncomfortable. Do you think market is looking at ETH as a cycle behind Bitcoin, or is this ETH pump the same as last cycle? I don't know. It's actually a very tough question. I'm not sure, because I was caught off guard by just how much ETH would outperform Bitcoin while Bitcoin was on the ropes. Now, in theory, I should have been fully prepared, because my entire argument, at least to myself and in live streams, was that if we get a close above this level, because double fakeouts are so low probability, any close above this red level, which the first one was here, that's like a mega moon ETH mission until, and again we spoke about this level as well, it reaches the first trouble area here. So in theory, I should have been grossly overweight ETH on this candle. Now my issue was that Bitcoin looked like a piece of shit. So in my mind, I was like, okay, ETH is gonna outperform Bitcoin, but if Bitcoin looks really bad, it's gonna keep a chain as to how far ETH can go. And then when Bitcoin starts to look bullish and breaks out, ETH BTC might dip in the short term, but if ETH is doing well in a weak market, it's gonna absolutely moon in a strong market. But because Bitcoin looked weak, I was like, well, I don't want to get that long ETH, because I don't think it can shake off the correlation to that extent. Like if Bitcoin takes a shit, I don't want to be stuck in an ETH long, even if ETH BTC is bullish. But I was wrong on the degree of that, because Bitcoin continued to look whatever, and ETH just melted faces, and the TA breakout, whatever, went up. So that's an oversight on my part. I should have been 50 IQ and followed my own TA, but I guess we learn from those. Dogecoin has some interesting levels. Just under 40 cents. Let me just make that slightly less offensively thick. Here we go. This kind of looks like a double fake out don't happen, similar thing. You've got resistance, trades above it fails, and then when that gets reclaimed, the chances of a double fake are significantly lower. So this looks like a real reclaim to me, and it's getting pretty close to its all-time highs. I don't know, is the Elon SNL thing coming up? Maybe it is, maybe it already happened, maybe it isn't, I've got no idea. But I wouldn't be surprised, as long as this level is held, that we have another attempt at the highs at this stage, at least given the reclaim of that level there. Matic is just kind of gone, at least for me. This is a really good example of the higher time frame stuff we talked about. At least to me, from a TA perspective, it's reasonably clear. Where you've got daily support up here, and then you've got your high time frame pullback support, whatever, all the way down here. So then it's a question, you know, you're essentially confronted with the choice. If you want to do business close to market, you buy the daily range low. If that fails, you get the fuck out the way, and your next level is basically the consolidation before this entire move up. So this chart, forgetting the specifics, it's a decent showcase of what I meant by letting daily structure develop. So let's say we take it back to this point. So I'm looking at this chart and you said, oh, Cred, I'm really bullish Matic. How do I get long? And I look at the daily time frame. My answer would be, you either wait for your higher time frame pullback into the range, and again, not just the whole box, specifically the upper boundaries and the lower boundaries, or you wait for some sort of structure to develop here, and then look for your intraday plays within that newly developed range. With the knowledge that if you're wrong here, you don't try to buy it like a bit below, no, you get the fuck out until it reaches the next higher time frame level. Because there's nothing worse than being caught in an intraday position when a higher time frame correction kicks in, right? That sucks. I've been there more times than I'd like to count. So the price action we have now isn't like A+, but it's a decent example of what I mean by let the price action develop and give you a range. And in this case, you kind of, you know, at least from the daily, or especially if you go down intradays, you can start bringing out some support structures which don't require price to retrace the entire move in order to give you something to work with. Do you see what I'm saying? Does that make sense? It will one day. Yeah, maybe. In terms of levels, Ray isn't far away from a decent level as well. If you're bullish on the Solana Sam ecosystem, I think most people are eyeing up this big flip level here. Again, 50 IQ bull market stuff, resistance, breakout. Number go up, and your invalidation obviously is a close back below the breakout point. This has been like slightly slow to move in terms of like post breakout price action. I think if you want to be really cheeky, being cognizant that 12.6 is the higher time frame level, you could just box out the specific recent consolidation before this upthrust, and some greedy wick type of entries around 12 would make sense given how close you would be to where you're wrong. And again, if you know where you're wrong and you're getting involved close to your invalidation, the time resolution for the trade will be lower. You'll know sooner whether your idea is right or your idea is wrong, and also your risk reward is greater if you do business close to your invalidation, which is like how I like to trade. Kind of do or die type of stuff, or at least I'm wrong very soon, so now's a good place to get involved. So if it wants to come back to its pre-breakout cluster, which is close to its breakout level, I think that's a decent spot given how close you are to your invalidation. And this is a pretty big level, generally speaking as well. Someone asked about DOT. It's just moving sideways. We can, however, use a pattern. Again, the double fake out type of thing is something we like to pay attention to. It's when good bearish setups fail, they're bullish. In this case, you have this. Weekly close, resistance, trades above, trades below. If it gets back above that level, the chances of a double fake out are low, and it probably continues higher. And that level is just around 40 on the weekly. think daily, or if you want to be conservative, weekly close. Actually, yeah, daily is probably okay. Any strength through 40, I think the highs are vulnerable, and it goes wherever it's going to go. We can start pulling numbers from our rears at that point. The whole 45, 50, round number, whatever. But this is a really good TA example. You've got resistance, 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 break, no acceptance, back below. You've got resistance at the level again. And if it closes above it or finds strength there, the chances, given it's already faked out once, the chances of a second fake out are low. And you'd expect continuation above 40 into the highs and beyond. So that's actually a pretty good looking chart in terms of structure to work with. Weekly / daily level at 39.7 / 40. That's dot. Someone says Algo seems to be doing that double fake out thing too. Let's take a look, David. Also, just generally speaking, I try to look at all your charts, but I will always give priority to people who take the time to at least tell me what to look for, or make a case for looking at something like, oh, this is doing that. I'd love to take a look in those cases. What time frame are you thinking? Weekly? Daily? Yeah, actually, weekly is a good example. Yeah, weekly is a good example as well. Highest close resistance, tries to break, gets sold into, resistance at the level again. If it closes above it on the weekly, the chances of a double fake out are low, and you're expecting $2, whatever. So yeah, that's a similar looking chart in that regard as well. Dirk asks a very interesting question. He says, how does news come into play when trading high time frames? So someone said ETH BTC level was doing its job. Hasn't done anything yet. we are far away, but you know it's a weekly area, so you know we'll have to see what happens. Yeah, the question about higher time frames and noise, or news, not noise. So a common argument you'll hear is the swing. Well, look, it's kind of like this. Swing trading sucks because news fundamentals. No, sorry, swing trading sucks because there's more time / scope for news / fundamentals to affect the trade. I'm sure you've seen this before. I have as well. And on its face, it's a totally reasonable argument that if you're trading like proper swing trading, so you're in a position for at least several days, maybe weeks, swing trading sucks because there's more time or scope for news or fundamentals to affect the trade. Now, yes, but I think this kind of confuses a very key point, which is when you're deciding the strategy for your trade, you always have to, like, kind of the time frame for your strategy, you always need to consider the idea of what's signal and what's noise, right? So for example, say you're scalping and you're trading really tight rotations on lower time frames, you've got some sort of edge based on behavior in the order book, whatever it is, like lower time frame stuff. Let's take the idea of a tether mint, right? Now, for those of you who've followed Salsa Tequila, you'll know that if you're on really low time frames and you see like a big tether mint, that has a short-term, or can have a short-term impact on price. Now, if your strategy is short-term, the tether mint will of course be a signal to either get you in a position, get you out, or it'll basically tell you to do something, right? Now, at the same time, if you're trading a swing strategy or like a daily close or whatever higher time frame thing, the tether mint will much more likely to be noise. So what you've got is the same bit of news which has totally divergent impacts based on the type of strategy that you're trading, right? Now, in the same way, let's take the idea of an hourly close, right? An H1 close. Same thing. Let's say I'm trading an intraday position where I'm just looking to get in at one level, get out, and it's just the hourly, like an hourly strategy, right? Selling hourly support, No, let's not do that. Selling hourly resistance into hourly support, or basically any type of short-term intraday trade. Now again, if there's an hourly close, within that context, that's going to be a signal. It's going to tell me whether to stay in, get out, right, wrong, etc. Because I'm only trading hourly moves. This is the time frame that I'm trading, and this signal is valuable within that framework. Now take the same signal, hourly close, but I'm actually trading from weekly support into weekly resistance. In that case, that same bit of information is probably noise, and it doesn't make sense for me to manage a weekly trade on the hourly time frame. Maybe on the daily time frame I could do that, but not on the hourly time frame. Do you kind of see what I'm getting at? And I think news plays a similar part, right? Both in terms of short-term management decisions, but also just how much impact you're going to assign to that type of news. Like, the magnitude of the news obviously matters, but just generally speaking, I think more so than talking about this news means that or whatever, I think this framework is more useful. Understand the type of strategy that you're using and how time sensitive it is and how short-term variables affect and don't affect it, and then make reasoned decisions as to whether whatever event it is, it could be news, it could be TA, it could be correlations, like whatever it is, you need to be able to filter, is it signal or is it noise? And I think the time frame of your strategy has a lot of weight on that decision-making process. And generally speaking, the relationship is that if you're trading higher time frame, slower moving stuff, you'll have more towards noise, less towards signal. And then if you're trading really short-term type of stuff, you have to be more sensitive to signal, and the chances are of something being noise are lower because more information is relevant. That's what it comes down to. How much information is relevant given what you're trying to achieve. If I'm trying to sell one weekly level to the next, and I could be in the trade for potentially 2-3 weeks, then most of the stuff is going to get filtered into this category. I don't care about hourly closes. I don't care about tether mints, this, that, etc. If I'm trying to trade like a 5-minute level into a 5-minute level, you bet your ass I'm going to be watching the tape, the news, everything, because my trade becomes more sensitive to this type of stuff. My weekly trade isn't sensitive to short-term stuff, but this will be. So that's kind of the determination. Those are the types of determinations that you have to make. I know it's a long answer, but is that somewhat helpful? Does that answer the question, at least, in terms of news, or just how to interpret things when it comes to trade management, etc., etc.? Good to hear. Someone asked about comp. USD pair looks decent. I know that it's into resistance at the moment, but I think generally speaking, as long as it doesn't fall... Ooh, that's very thick. As long as it doesn't fail to break out, continuation is more likely, but I wouldn't buy it like right here. It's just a bit of a tricky area with these prior lows on the BTC pair. The USD pair is... Again, this is like a pretty good example where the USD pair is just melted faces and looks mad bullish. So you kind of look at the BTC pair and see, does this make sense from a relative to Bitcoin? Like, does it make sense to get long this relative to Bitcoin given I'm out of USD levels to use? For me, this isn't the most attractive area. I'd kind of wait for it to trade through this prior range low. You can see it's a pretty big level. Old support, resistance, back into that level now. I think an impulse through there would probably clear the way for USD continuation. And then given the USD pair is, how we discussed, far away from high time frame structure, we come back to our decision tree. But you either, on the high time frame, you wait for your high time frame pullback, right? Or you wait for a new range or new structure. If you don't want to do that, your low time frame option is just to buy support. At least that's how I think about these those types of decisions. Yeah, I think we've covered a lot of good ground. And again, don't forget the Technical Roundup, the newsletter, free, 1 email per week, etc., etc., comes out tomorrow. So I'm sure there'll be a lot of follow-up material there. But for the time being, just to summarize, Bitcoin still at the weekly range high, needs to do more. I can't buy this if I'm following my system, so I kind of have to wait to buy higher, which I have no issue doing. Or buy lower, which would suck, but at least it's structure that I can work with. On the ETH side of things, USD pair, super strong, kind of far away from most stuff that's actionable to me. The higher time frame stuff is in the low to mid 2K, which seems like a lifetime away. And the nearest intraday support is the pre-breakout range at 3.1K, with 3K probably being some sort of psychological floor. The only other thing that's relevant in terms of ETH, USD pair price discovery, BTC pair like approaching the first trouble area level of resistance on the weekly. The case for continuation becomes abundantly clear. If we close above this, then we just kind of go to the other side of the range. And that's all I've got so far. Hope that makes sense. Hope that was helpful. I know I ranted on some about kind of swing trading and structuring, how to buy pullbacks and all that type of fun stuff. Hopefully some of it was useful. You know, I like to talk about decision-making frameworks because you can take that with you beyond any specific chart, live stream, and, you know, have some frame of reference for these things that could be helpful if I've done anything valuable. That's all I've got for the time being. Newsletter tomorrow. And you might see me again on Wednesday covering for the duck, depending on how things develop in that regard as well. So no shortage of cred on the timeline this week. Thank you to Blockfolio, the sponsors of Technical Roundup, mobile trading app. It's the only ethical way to shill crypto to your family as long as you buy it for them. I bought some FTT and Solana for my sister. We'll see if she hates me in a couple of years. That's all I've got for now. Thanks for hanging out. You know I appreciate it, and I will see you soon. Take care.